that I kind of struggle with, and I'm very, very curious on a little bit more clarity. You know, maybe just a couple things, not really getting too deep into it, but you know, when you go to start your own business, whether it's a S corp or LLC, you know, you need business credit to do things.
Absolutely.
And you know, when you first start off, they're working off of your credit.
Absolutely.
So how do you build business credit? How is it separate from yours, and or more or less, when does it separate from your personal credit? You know, when you can say like, okay, I'm going to buy this and just use my business credit and keep my personal credit alone. And I'm going to toss one more thing into, how long do you think it might take to kind of build that up?
Yeah, the standard is about 2 years.
2 years?
That you will have to use your personal credit and use your personal guarantees to go ahead and start before you can start using the business credit. It's a standard of about 2 years. Depends on the industry, depends on the type of credit that you're trying to start. Could be at a line of credit LLC.
Yeah.
Line of credit LLC.
Yeah.
Or you want to go and get a credit card or business loans. Most banks and traditional is going to give you a business loans. Others will go through you, such as a hard money lender or any other type of lines of credit. If you get a real estate line of credit, they'll work with you a little bit better as long as you've had the business in existence for 2 years. Sometimes it'll go down to 1 year. But you definitely want to make sure you watch a couple of things. One, watch to make sure how much you're personally guaranteeing. You want to keep those two separate as much as you can between individual and business credit, because the business credit, you want to have that business solely set up for just that business and the credit over there. So when you start something else, you can start your business credit on that one. But if you have it all on you solely, now your concerns start with the DTI, which is debt to income ratio.
Right.
How much liabilities I'm having versus how much income. And a lot of people run into issues that they cannot receive additional credit. They cannot receive other things such as buying a home because they have the DTI is too high.
Right.
They have too much credit.
Okay.
So you want to look at that.
Yeah.
The business credit.
I just always was like, you know, trying to figure that out, because, you know, they still using your social to do everything, and that's usually kind of where all that stuff is connected to.
EIN. You want to go to your employee identification number and use that. That's just like your social security number for a business.
Gotcha.
But you want to keep that private, and you want to do that, keep that separate so it doesn't impact you. So that if something happens, that business shuts down, it stays there. It does not impact you.
Right. I like it, man. I like it a lot. If you enjoy this content, if you like it, please think to tap the like button below, subscribe, and share this video with people that you would think would be interested.